Welcome back to Graceful Aging by Design. In a real estate market as complex as Metro Vancouver, the dream of home ownership for the next generation often feels like out of reach. And many of us want to help our children or grandchildren find stability, but we worry about our own financial security. So today, we are back with Jordan Thomson, the mortgage strategist, to talk about how to pass that as a living legacies.
Welcome, Jordan.
Thank you, Karina.
So today, as Frank said, we're exploring how to safely and strategically leverage your assets so that you can help the next generation if you want to, and you can see sort of the impact of your gift, right, during your lifetime, but without compromising your own retirement plans.
Right.
So I guess let's start with this question. We're seeing more Vancouver seniors wanting to give back, wanting to give to the next generation while they're still alive. And I guess some people might ask, well, what's the most efficient way to do that? To unlock the equity, I guess, for a down payment for a grandchild and still keep your own retirement funds, right, intact?
Well, certainly, I mean, it's a great conversation. I think we discussed before, people are living longer, and the living legacy, the passing down of wealth to help children who are often by this time when the money is coming down, they're 40 or 50 years old, maybe when they're younger. But families, older Canadians are really trying to help their younger family members earlier by passing down some of their wealth. Now, I absolutely work alongside the financial planners with this because often people have many, a different investment portfolio, which will definitely include their home, but it might be investments, it might be trusts. And then what is the best way to do that? And it can be a couple of different ways. One of the more popular ways, and Frank, you're talking about the fact that home ownership is out of reach. Well, I just saw the stat, I want to say it was yesterday, that the age of being a first-time home buyer has increased to 37 years old here in Greater Vancouver, which is, it's pretty old. So people are spending an awful lot of time living at mom and dad's, and it's meaning that they're delaying family, which I think is really important. So parents are wanting to help out because they are wanting to, see the enjoyment of their children, potentially grandchildren, or they want to keep their family near them. And the down payments required are really difficult to attain. That's the issue. It's the down payment requirement. That's the hurdle. So the first way is a gift, a financial gift. So that is literally money. So I'm going to help you by providing $100,000 of a non-repayable gift that you can use as your down payment. So that can be partially from your assets. Some parents will they will use some of the equity on their home, whether that is from an existing home equity line of credit that's in place. And even in some cases, they will use the reverse or retirement mortgage. Now, when we're doing that, I'm fine if it's a gift and it's coming from investments, or maybe you've already earmarked that with your financial planner. You know how it's going to affect your retirement plan moving forward. That's great. But when it comes to looking at when it's from the home, I always want to work with everybody involved to make sure that we know how that at some point is going to be paid, whether it's the parents say, well, in fact, we're moving in 2 years anyway, that's okay, we're okay to do that, because I do not want it to impact the senior's ability to live a quality life either. So that's really important. Sometimes when you have a little bit younger of your adult child is a little bit younger, sometimes the child will help the parent pay their mortgage. Let's say if they've borrowed from a home equity line of credit, maybe it's the child who's making that payment as well. So we want to run the numbers and make sure that that fits within the home buyer's budget as well, because that, they're paying the interest on that line of credit. So we're making sure that it's not just the parent giving the money. We want to make sure that it does fit in their overall retirement plan. We definitely don't want them to have no money and just hand it to their kids entirely.
So we know that as a parents, we want to support our children or grandchildren, but at the same time, we need to consider like how will that not jeopardize our own self financially? Is there anything we need to consider in your opinion? What the parents need to think about before they make that decision to really help out their kids?
Well, absolutely. I mean, at the end of the day, they have to make sure that their retirement is protected. It's not just about giving randomly to the kids, and you don't want to be manipulated. And we do actually have, for example, with the reverse mortgage, with the it is a safeguard. If we feel in any way that there is the manipulation by the child, and that the parents are not acting necessarily on their own volition, that we will stop that. We're very, very aware of that, as are the banks. So that's actually part of the know your client, to be honest. I just did one with a bank today, and we have to watch how the children are with their parents when it is coming to that equity takeout. We also don't want it to be so much that now we've got, let's say, we can go right up to 80% of the value of the home. If the parents, for example, have that income to qualify. If a parent says to me, well, John wants this much, and why don't we just get the maximum we can? I'm absolutely going to have a talk about that, because that really does leave them vulnerable should there be any dip in the market, especially if it's a bank mortgage. There is no safeguard in place there for if the value of the home drops, and now your mortgage is potentially worth more than your home. So it is definitely a lot for me to make sure that we're doing that. This is a little bit different than what you're thinking. A lot of families are giving their grown children gifts for their next home because they're now married. So their daughter or son started with the small condo, and now it's time to move up, and they've gained some equity, and now they're expecting a family. And so grandma and grandpa really want to be part of that. That is when we bring in the estate planner and the lawyer, so that sometimes when we're giving a gift to our child, we need to be very, although it's not great, but realize that there may down the road be a marital breakdown or some type of breakdown, and how do we protect that asset that we've now given to our adult child. Sometimes that's no problem, right? It's okay that it's divided. And even legally, we're going to do that. There's a clear agreement, because part of that down payment, especially for some fairly, large down payments, that is part, the parent is really wanting to see it used in a certain way. So that is something that a lot of people forget. And I always talk to families about that. And so we'll bring in a lawyer for that.
I really like that you brought up the fact that you do need to work with the team of professionals that have been working with your client, right? Whether it's a
Absolutely.
financial
Yes.
planner, an estate lawyer, all these people who can guide the decision making and making sure that
Right.
they are protected, as so that they can feel comfortable giving that gift to the next generation.
Exactly. I do want to mention one thing I'm not a fan of. This is me personally, and I don't actually know many that are, which often parents will jump to is I'll co-sign.
Okay.
That really puts people into a vulnerable position, because when you co-sign for your child, that mortgage is 100% your liability. It shows up in your credit report as 100% your own. And should there be any default by your child for whatever reason, you are on the hook. And banks do not particularly care that, well, I was just trying to help out my child, right?
Yeah.
So I'm not a fan of the co-signing. I would prefer the gift and then having definitely some, agreement about that or discussion about that as well.
Yeah.
Yeah.
On the side note, I really recently I noticed like even for bank accounts, a lot of seniors will have a joint bank account with the kids, but they didn't realize that if the kids have financial issues, the bank still be able to charge for the same account. So it puts seniors' financial in jeopardy if they rely on the bank account for the income.
Yes.
Yeah.
Yes. Yeah. There really are a lot of pieces of the puzzle. Yeah. And you do want to bring in that team of professionals for the whole, especially for older Canadians. There's so much to consider.
Yes.
So that kind of just leads into the next question that I was going to say. What are the other blind spots that most people don't really think about when they're trying to help a child buy in BC? That we probably already touched on a few of those. Was there anything else that you can think of?
The co-signing, not understanding the legal kind of repercussions or thinking longer term. Something that families like to do is put their child on title of their home to pass that down. And again, that's where we really want to bring in the lawyer, because there are different ways to do that. How that's structured, is the adult child a 1% owner on title? How is it set up? And what are the tax implications of that? It's not just as straightforward or as simple as saying, okay, well, I'll put my child on and it's, a done deal. There are different ways of passing down property. And so you want to be aware of, what the legal implications are and what the tax implications are as well.
Yeah, as a realtor, we always look out to that. Like when the parents say, I'm going to let my kids on title on that. And we always advise that you need to really look at it, because it may jeopardizing your kids' first-time home buyers benefits, and then you are taking that away from the kids, and they can, when they really purchase their own home, they lose that, and a lot of people don't realize that.
Right.
Yeah.
Right.
Yeah. So, and is there anything like, for example, like for also when there are like two siblings that want to the support from the families, is there anything like the parents need to consider if we want to give that down payment to one kid, and then how to treat it fairly to the other kids? Is there anything like they need to consider?
I love that you asked that, because I was like, do I speak more? Because that's another blind spot that I wanted to bring up.
Exactly.
You have to be really aware that if you have more than one child, and that's one of the reasons that co-signing is so problematic, because you've co-signed for a $500,000 loan for one child. You might have a little mortgage left of your own. Maybe it's just little, maybe not. $500,000 today takes, about $100,000 to $120,000 of income, right? So you've done that for one child, and then your other child needs some help. Well, you've already got a $500,000 loan. Oh, well, but no, I don't. I'm just on there. I was just helping. Okay, but the bank sees as you already have that loan. You can't co-sign for the second because you're already maxed out with the one. So right away, co-signing affects your ability to help that other child. And should you need any more access to equity on your own home, it also affects your ability to borrow on your own home, or, like I said, a future child. So some parents are very conscious of, if one child gets this, the other child gets the same amount, right? So we make sure that we leave enough and that it is fair and equitable. And in cases where perhaps it hasn't been, or the siblings see it as an inequitable distribution, we certainly hear about, recently learned about estate litigators who deal with that after the parents have passed. And one child will come forward and say, well, Sally got this much for her home, I didn't, so therefore I should be getting more. And you never, ever want that, right?
There's so many like unintended consequences that we need if we, like you say, co-sign and then put. And you never know that if I want to help these kids and the other children need help and I cannot do that.
Yeah.
Right. And that's always put the, people in very hard situations. And beyond just like cash or finance, when the parents want to involve a mortgage strategist like you, is there any other things like that you can do to help maybe the next generation to more about financial literacy and how to manage their wealth, and when they're receiving that inheritance from the parents?
I think that we don't talk about money enough at all. And I encourage older Canadians to involve their children early on in this process. Right from, like, I'll start with somebody who's 30 and they've got a 2-year-old, and I say involve them and start teaching them to understand how to invest and save and be open about yours. I do have cases where families are very unwilling for their children to understand when they are lending them money or gifting them money. They do not want the child to understand financially where they are. So I have to keep it very secret, which is difficult, right? I mean, I shouldn't say it's difficult, but it's very hidden. And so we see that passes down to the child. They've never, or in the adult children, they've never kind of been taught early financial literacy. I think it's very important to do that.
Yeah, at the same time, I think just financially how to really understand, manage the debt and how to use the mortgage process too.
Like literally using a mortgage to understand.
It's just as an education process. I think that's the.
My real answer is unfortunately Canadians know nothing about their mortgage, which kills me, because they just don't. But yeah, getting a mortgage can help you with early financial literacy and just financial literacy. And you'll find that mortgage strategists and mortgage brokers like myself, we really look at the holistic picture. It's not just, hi, Karina, you're buying a home. Great. This is how much you qualify for, and I'm going to go for the maximum. And okay, see you later. I never talk to you again. So a mortgage broker is really a long-term financial player in your life. So I work with people who are, they're just having families or they're going back to school, and we're using the equity in their home to help them do that. Or maybe we're paying it down so we can do other things. We're really using it as an overall financial strategy because it is one of the most important financial tools. And so if parents are giving you money and helping you do that, that's great. They could give you money and it can go into an investment, and that's how much you have in your investment. Whereas if they're giving you a gift and you're getting a mortgage, really you now have an asset that is worth much more than had you just put it into an investment, for example. But you do need to manage it. You do need to look beyond just today, right? A mortgage is a long-term liability, and we look at overall cost of the mortgage and how that works into your financial plan, both now and down the road, because it changes all the time, all the time. And that's really what it is.
Yeah. And we usually, as a realtor, we always mention to our clients, like, when you are paying the mortgage, you are saving for your own future and building your equities. You are preserving that cash rather than not against tenants, but sometimes the rent, you are not preserving that for yourself. So that's the thing. Of course, everybody have a different situations and lifestyle. At the same time, we always think that it's important for people to understand the difference and how to plan for yourself in long term. Yeah.
Well, it's forced savings.
Yeah.
Right, and it does. Typically here in Greater Vancouver, homes are they do increase in value over time, and you really you do want to stay in the home for several years to make it worth it. But it is forced savings, and when people come and say, well, can we get a better rate and they're renting, I say, well, right now you're paying 100% interest rate, right? Like your money's gone. You're paying somebody else's mortgage, and it really does help people, and homeowners. By retirement, they have amassed a much larger net worth than renters. We have so many statistics to show that, and it's a great wealth generator, and you want to have, you want to spread your assets out, right? And home ownership is certainly a very good to have in your asset portfolio for sure.
And especially like for people's life change, they may want to start a business. You still have that safety net to help them to start the business and create a better wealth for themselves and their family as well. I think that's a very important things. Like Canadians need to understand like how home ownership and using a mortgage as a right strategy, be able to assist them in long term.
Oh, I'll use a very personal story. My parents owned an engineering company, and I 100% know that their home and the equity in their home in the early days, I mean, they're long retired now, absolutely helped build that business, which ended up being a wonderful asset when they ended up selling. But initially, they used their home, and it's not for everybody, and you can't always do it. But we can often use it to build those businesses and then weather those downturns. I mean, we all three of us, our business goes like this, right? So I've been putting in my home. So maybe I might need to do that. And that's certainly better than using an unsecured line of credit, or where else am I going to get that? But I still need to work, right? So,
exactly.
Yeah.
Well, one of the things that I'm taking away with me, and I guess we can lump this under the blind spot, is just not having enough communication with your kids or your family as to, how your finances work and what they need to know. And then you touched on financial literacy, which is so important as well, making sure people are educated that way, especially when you're dealing with a large amount of money.
Well, it seems to be so taboo in Canada. I don't understand.
Yeah.
I don't understand. You ask a child, or a teenager, what does your parent do? Well, I think they do that. Do you know how much they make? I have no idea. No idea. And a lot of parents think their kids have a lot more money than they do, and vice versa.
Yeah. Yeah.
Oh, my parents are fine. They've got this. I see that disparity all the time, and they're not talking. They're not helping one another, and it's like they're separate, like from separate families. And I think the earlier you bring it up and stop being afraid, like
Absolutely.
why I don't understand that. Yeah.
But I do feel like Canadians are start opening up for younger generation. They are more willing to talk about how to train themselves, and there's younger generation for the financial literacy, how to manage their money, and they start aware that the importance and that the legacy isn't just about like what we leave behind. It's about the stabilities that we can help create today.
Right.
Yeah. So it's just right about, as Jordan showed us, like helping the next generation doesn't have to be the risk. And if it's done correctly and with the right strategies, and we have a clear plan, that's the most important things.
Absolutely.
Yeah.
Thank you so
Thank
much,
you,
Jordan, for
Karina
joining
and
us
Fran.
here again. And we took a deep dive today into intergenerational wealth. If you found these insights helpful, then please share this episode with a family member or a friend and anyone who might be starting out with these crucial conversations, because I really feel that they are important. And remember that a well-defined plan is the best gift you can give your family. Until next time, keep designing your graceful future. Thank you.
Thank you. And thank you, Jordan.
Thank you.
Thank you.
A huge thank you to Jordan Thomson from Citywide Mortgage Services for joining us today. We appreciate her coming on the show to share with us her thoughts on passing on living legacy through utilizing high-level mortgage strategies. Here are your design insights. Plan Your Living Legacy is about passing down wealth to your family while you're still alive to see the joyful, real-time impact of your gift. However, you should gather a team of professionals, like financial planners or estate planners, to evaluate what is right for you and not compromise your retirement. When providing a financial gift to clear that down payment hurdle for your children, it must legally be structured as a non-repayable gift. While you can gift from your liquid investments, many also look to their property assets for HELOC or reverse mortgage to get access to the money. But remember, never give blindly. It's crucial to mathematically model how extracting equity will alter your daily retirement budget. Your quality of life should never be sacrificed. Avoid over-leveraging. That can leave you incredibly vulnerable. Here are some blind spots on sharing your debt or asset with your children. While co-signing seems to be innocent enough, it can actually become your legal liability. If you have a joint bank account with your child, if the child misuses the share account, it could leave your retirement fund in jeopardy. While it's incredibly common for families to add a child to the title of their home, you should consult with professionals to ensure both you and your child will not be affected negatively due to the unintended consequences. Helping your children secure a foothold in a difficult housing market does not mean you have to sacrifice your own financial independence. Always protect your own aging journey by working with a collaborative team. This can include mortgage professionals, real estate agents, financial planners, and legal experts to ensure your blueprint for the future is built to last. If you have any questions or topic suggestions, reach out in the comment section or email us at gracefulagingbydesign@gmail.com. If you found any of the info useful, please like and subscribe. It'll help us grow and reach more families who need these information. Thank you very much for watching. We'll see you in the next episode.